references. Perfect. Perfect. Okay, so today we're going to be looking at market structure. I just want us to get straight down to business because I mean, a lot of you have anticipated this day for quite a long time. It's almost as if it's forever. It will never come. So finally, we are all here together. So let's begin, shall we? Now, I want you guys to know something about this market of a thing. Yeah. The most important, like the most vital aspects when it comes to, studying the markets is understanding the structure of the market. Before you can delve deep into liquidity, all those kind of stuff. You need to understand the movement of price action. Okay? Price action is key. Please, I hope you guys are like jotting down or something. Price action is key. Very, very key. Without price action, market structure, trust me, you would have no idea how to go about your trades in the market. Okay. Sorry, guys. I just took a trade on V25S. Let me see. Okay, good. All right, let's continue. So we are going to be looking at price action and market structure. Now we have two types of market structure. We have two types of market structure. We have what they call basic market structure. Where's my text? We have what they call basic market structure. And we have what they call advanced market structure. Please note that down. Advanced market structure, very important. My goodness, what's going on? I know quite a number of you already have idea of what market structure is, but this is something we cannot skip. No matter how good you are already in the market, we cannot skip market structure. If we don't know market structure, we are just playing in the market. We have no idea the direction of the market, where market is going to. We are just there, just doing guesswork, which shouldn't be like that. Okay? So what is basic market structure? This is more, I know you've heard about retail traders and you've heard about smart money traders, or like how do they call it? Institution. Like where the big ballers trade, how they trade is quite different from how retail traders are. But basically, most of us, majority of us, I think we are all retail traders though. I think we're all retail traders because I mean, we can't actually have any influence in the market. We can't, our little cents can't move the market. Whether it's $100,000, whether it's $10,000, whether it's $1,000, $200,000, that has no influence in the market. Trust me. When we are talking about the big ballers, we are talking about the hedge funds, talking about the stock traders, those big guys pushing market like with over $1 billion. $500 million. So you can see the impact that would have in the market on like our normal usual trading. So if we are calling ourselves SMC traders and all that, it's not really, we are not really SMC traders. We are not really trading like the banks and all that. Okay, so we are all retail traders, but some of us have delved into the smart money concept, how the big banks think, where they enterprise from. Someone said my screen is blurry. Bro, it's not from yours, from your network, please. My screen is very, very clear. Okay? It's your network. Please, let's continue. Let's continue. I don't want any distractions, please, because we don't really have much time. So basic market structure. This is more of like your usual higher highs, higher low, higher highs, higher low. I mean, we've all seen this over and over and over and over again, but majority of us don't know how to implement all this. This is what we call the uptrend. This is what we call the uptrend, right? I know some of you will be thinking, but I don't already know this one now. Why are they not teaching us this thing? Bro, sis, it's very, very important. Very, very important. You can't just go from 100 level to 400 level. It does not work like that. Okay. Then we also have what we call the downtrend, which is the lower highs, lower low, lower highs, lower low, lower highs, lower low, and so on and so forth. We call them the downtrend. Please, you guys take notes. Take notes. Very, very important. I'm not rushing the process. I'm taking it as slow as possible so you all can catch up and understand. This is what we call the downtrend. And we also have what we call a ranging market. A ranging market. This is what we call the ranging market. Don't worry, guys. This is just the beginning. We're just getting started. Ranging market. Trust me, you enjoy it. Like there's this joy that comes with knowing what you're doing. Trust me, if you don't know what you're doing, you'll be confused in the market. So it's better you know what you're doing so you can enjoy your trading. All right. So now an uptrend. What's an uptrend in the market? So the uptrend simply means that there are more buyers in the market than there are with sellers. I mean, people are buying a particular price, a particular instrument, at a particular price, raising up the price to keep going higher and higher and higher. So it's more like the demand is more than the supply. Okay, I'm going to teach you guys about supply and demand later on in the future, but we're just going to focus on market structure, which is very important. Okay, this basic market structure is gonna be teaching us how to go about our advanced market structure. That's why I want to focus on this first, and I want you guys to learn it well. Okay, so now the uptrend, buyers are more active than sellers, while the downtrend, the sellers are more active than the buyers. Okay, there are more sellers in the market than there are buyers in the market. Then we also have what we call a ranging market. A ranging market simply means that the buyers and the sellers are of equal ratio. Do you understand? They're of equal ratio. Like no one is overshadowing the other. No one is overpowering the other. So that's why the market is stagnant when it comes to a ranging market. It's just moving within a particular zone, within a particular price action. It's just moving within this. So there's no breakouts, no nothing. No one is buying more than the other. No one is selling more than the other. So it's just within this. Unless we see something like this, unless we see either a breakout to the upside, then we know that yes, the buyers are now more in the market. But if we see something like this, a breakout to the downside, we know that yes, the sellers are more active now in the market. Okay, so these are what we're all going to be putting into consideration when we are trading. Now, we have what we call the advanced market structure. But before I go into advanced market structure, I want to talk more on this basic market structure. Now, in this basic market structure, this is where we have our support, resistance. Yeah, this is majorly about support and resistance. This is majorly about support, resistance, support, resistance. That's what basic market structure is mostly about. Support, resistance. A lot of us that trade retail trading, this is what we trade. We trade the basic market structure, just waiting for price to break out of a particular zone and then retest it and then continue to the upside. But in the advanced market structure, it is not like that. That is why most of us, majority of us, keep getting stopped out in our trades, probably because we got in too early using the basic market structure, because we're expecting that, okay, as price breaks out, we're expecting a retest and we're expecting continuation. But the advanced market structure have a different rule. The advanced market structure states that all of these higher highs, higher lows, higher highs, higher lows, they are all what? Liquidity. They are all just liquidity. So that's why most of you keep getting stopped out in your trades, because you are entering at a zone that is most likely liquidity for the big ballers, for the smart money traders. You understand? So all of this right here, there's what we call trend line liquidity. I'm going to teach you guys about liquidity, but you see all of this move, they are all liquidity. They are all liquidity. All of this. They call them trend line liquidity. So all these are just traps. They are all just traps. So all these, they are just building money, because liquidity basically is money. I mean, without money in the market will not move. Price will not move. Are you guys understanding? Without liquidity in the market, price will be stagnant. Price will be ranging like this now. You see this right here. There was no liquidity here. That's why there was no move to the upside, no move to the downside. Price was just stagnant. But you see this here, there was liquidity. You see this here, there was liquidity. Okay, so it either pushes price to the upside or it pushes price to the downside. Okay, so that is what I'm going to teach you guys later on liquidity. So now let's go to this advanced market structure. Now, we know that market is supposed to form resistance and support in the basic market structure. But in the advanced market structure, market does not respect support, resistance, because those are traps. Look at how the I want you guys to observe how the basic market structure movement is, and I want you guys to observe how this advanced market structure movement is. Look at this. We have a higher high, right? No, let me start from here. We have a higher high. We have a higher low, right? We have a higher high again and a higher low, right? So price is supposed to what? Respect this support here. So supposed to respect this support that was initially a resistance. So price broke out and now it's supposed to respect this, right? Then price does something like this, goes back up, respected it, right? They're supposed to respect this one again. But what then happens? Price takes this out, right? Then continue to the upside. Then it goes again, respected, right? Goes again. Then you're hoping it will respect again. But price did not respect it. Price took you out. Because initially you'll be entering from here, hoping that, okay, you'll be entering from here, hoping that price is supposed to retest this support and then continue to the upside. But what does it do? It takes you out of the market and then continues to the upside. You can see the movements between the difference between the movement of this basic market structure, which is so simplified, and the movement of this advanced market structure. Are you guys listening? I don't want to rush it. Are you guys understanding what I'm saying? Are you guys like understanding what I'm saying? If you're understanding, please, okay, good. Okay, good. Because I don't want to rush the process. I want you guys to understand. Now, I want you guys to know that you see all of this. These are what? All of these are what? This a break of structure. All these were supposed to be a support level for price to continue, but you see that price did not respect those support levels. Price did not respect those support levels. Price keeps smashing through it because they were all liquidity. You can see what price is doing here. Price is taking you out of the market so it can have enough money to move to the upside. This one. So that's what price is doing in the advanced market structure. Now, the rule in the advanced market structure states that B must. I'm gonna give you guys the alphabetical way to arrange a advanced market structure from the swing high to the swing low. But I don't want to rush that process. I want you guys to understand the movement of the advanced market structure. Please note it down or draw it out somewhere. This is the movement of the basic market structure. So simple, right? Price is just supposed to be going higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. But that's it. That's just cap. That's cap. Market does not move like that. Market can never be as smooth as this. If market is as smooth as this, we would all be billionaires. Come on, think about it. Forex, trading will be so simple that we would all be so fucking rich. Mind my language, I'm sorry. Trading would be so simple if it was like this. Just break retest, break retest, break retest. But no, the big ballers, then they know what they are doing. They can't make trading for us this simple now. Come on. They can't make trading for us this simple now. So you can see the complexity in this. You can see the complexity in this and this and this basic market structure. You can see how simple the basic market structure is. I can see how complex the advanced market structure is. Okay, so they will make it easy for us. So this is what we need to learn. We need to understand the advanced market structure. All right, because now you know that price moves from one point to the other. Price moves. Who's this? Please, who's writing on my screen? How is this even possible? This is sorcery. Please, you're writing on my screen. Clear it, please. So, guys, we know that market move from one point to the other, which is point A to point B. Who be this one now? Please, guys, if you are writing something on the screen, please stop it, please. Thank you. So, please, guys, note this advanced market structure. Very, very important. Very, very, very important. The basic market structure is just creating liquidity for what? For the advanced market structure to take place. The basic market structure is taking what? Is creating liquidity for the advanced market structure to take place. Okay. So please, if you don't have clarity on this yet, you can drop your questions in the chat box. I'm going to go back and I'm going to explain again. All right. I'm going to explain again. So now, I think you guys always see me do something like this. You guys always see me do something like this on my charts. You guys always see me do something like this on my charts. You see this, right? You see this and you see this. Then you see price coming back here. It is this simple. It is this simple. This is how simple it is. This is how simple it is. Respecting the advanced market structure. It's all about liquidity in the market. So I want you guys to, master this, what do I call it? There's a word for this. Is it model? Okay, it's model. They call it model. This is what you guys need to master because this is the key to everything. This advanced market structure. They call it the algo market structure. It's the same thing as advanced market structure. So once you can perfectly, see this advanced market structure on your charts, trust me, you will never be able to unsee it again in your life. Once you can see it, you can never unsee it. This is the secret. This is just the secret. I know most of you know about this. Most of you know about this, and yet you are not profitable. But don't worry, we'll get there. That one is just psychology, okay? And my how to stack, how to flip accounts. We'll get there. But you need to master this entry model. Very, very important. This entry model right here. You need to master it. So I don't know if you guys are like drawing it out or jotting it out. I'm recording the session, so I'm gonna send it out later. But you guys, please note that this is the advanced market structure. This is how it should be. Let me tell you guys the rules about advanced market structure. Now, rules about the advanced market structure. Can I proceed to the rules of the advanced market structure, please? Someone say, please, I don't understand the advanced market structure. Okay, good. Good. Let me go back to the advanced market structure. So now we know that price is always creating liquidity. Price is always creating liquidity when it's moving. You can never see price move like this, so smooth. It does not work that way. It does not work that way. That's why most times you guys will see that on the higher time frame, those having issues with top-down analysis, you guys can see that on the higher time frame, price might be a little bit bearish on the higher time frame. On the 4-hour, then maybe when you go to the 15 minutes time frame, price is bullish. Okay, this is as a result of liquidity in the market, making price go not as smooth as this. Like I told you earlier, if price goes like this, so easy, we would all make money in the market. But instead All of this that is moving like this, they are all just liquidity being created. They're all just liquidity being created. Okay, and price is going to do what? Price is going to take them all out later. Price is going to take out all of this liquidity later and then continue its journey to the upside. That is where your advanced market structure comes in. Are you understanding? That's why when you are trading retail, you say that, okay, this is a trend line breakout. Okay, price has broken this trend line. Let me take a sell from here. Price has broken this trend line. Put my stop loss here, blah, blah, blah. You understand? But all of this is just what? It's just all liquidity being created for market to continue its move to the upside. Okay? So that is what advanced market structure is. It goes up, gives you a higher high, higher low, goes up again. Take out this liquidity here. Take out your higher low, then continue to the upside. Gives you a higher low again, right? Goes up again. Takes out this your higher low again, then continue to the upside. Okay? Gives you another higher low, goes up again, takes out this your higher low again, then continue to the upside. That's just what the advanced market structure does, basically. It takes buyers, it takes early buyers out so that price can continue to the upside. He uses them as liquidity. He uses those buyers as liquidity or sellers as liquidity. So people buying here, you see people buying from here, let's say here, they're going to get stopped out. They're going to get stopped out. People buying from here, they're going to get stopped out. Because what is market doing? Market is taking them out to use them as liquidity to continue to the upside. To continue to the upside. That's what market is doing. Can you see? That is the advanced market structure for you guys. This is the secret. Like this is what you need to understand in the market. Okay, this is what you need to understand in the market. This advanced market structure. Okay, guys. This is all you need to understand in the market. Know how to enter your trades using the advanced market structure. I'm going to teach you guys entry, but if you guys don't understand market structure, you won't be able to enter the markets. Thank you. Liquidity is full. Exactly. If you can't spot the liquidity, you become what? You become the liquidity. They go use you for the market. They go use you play football. I swear. So if you can't see the liquidity, you become the liquidity. Sure, you don't understand. So, brethren, please, this is serious shit. We are not joking here at all. We are not joking. I think the assignment I will even give you guys is to spot the liquidity in the advanced market structure. Okay? Because if you can't spot liquidity, bro, now you go just say your village people, they do you. You talk say, you talk say that manipulation. Which manipulation? I got to realize that there's no fucking manipulation in the market. Either you are in too early or you enter prematurely or something. There's no fucking manipulation in the market. Okay? Now imagine something like this. Imagine trader A wants to take a trade like this. Trader A wants to take a trade like this. He has seen support, right? He say, okay, support is around here. Price is moving to the upside. Price is moving to the upside. He has entered here. He has entered here. Where's my long two? Okay, he has entered somewhere around here. Come on, let's do this thing. Okay, he has entered somewhere around here. Let's say if stop loss is below here. This is where trader A entered. Let's assume that okay, this is support for him now. Trader A saw the support. Price is reacting to this zone. Man stack, man enter for here. Tony Stack. Oh yeah, he don't enter market. Shey they see. He has now entered the market. So it's going up, He's in profit, quite all right. He's in, let's say, $100 profit, quite all right. Price is going to create a new high. Bro, that is all cap. Who tell you say that now it's price on to be that? Look at this right here. You are already automatically liquidity. Trader A is already automatically liquidity for the advanced market structure to take place. And what will the advanced market structure do? It's gonna come back here, take out trader A. Why you, trader B, smart money trader, you are entering here. Yep. Taking this trade from here, this is your entry. You're targeting this. Trader A is already stopped out. Trader A is already stopped out. You are just entering the market. As per se, you wise normally. You understand? This is where your entry is as a smart money trader, or let me say as an advanced market structure trader. Now, this trader right here is a basic market structure trader. Let me write it out. Trader A is a basic market structure trader. So definitely this will be your entry here. So this is trader A for you. Why trader B is an advanced market structure trader. This trader B. Trader B is what? Trader B is an advanced market structure trader. So trader B, who is an advanced market structure trader, is waiting for trader A to be taken out of the market before he enters. Okay? He's waiting for the market. He's waiting for the trader to be taken out before he enters so that price can finally move to the upside. Now, trader A automatically has become liquidity. Are you guys understanding? Trader A has automatically become what? Liquidity. This is it now. See, this is trader B. Trader B has kept money for trader A has kept money for trader B to enter the market, because without money in the market will not move. Are you seeing? So trader B waited for this trader A to be taken out, comes back here, and then continues to the upside. Free journey. Oh, it's not easy, shall. And then continues to the upside. Trader B will be swimming in profits and he will be happy. Don't you want to be trader B? Don't you want to be an advanced market structure trader? Do you want to be a basic market structure trader, being liquidity for us, the trader B? Think about it now. Think about it. Who is this one? Thank you. So guys, please, I don't want this class to be all boring and stuff. You understand? Because you won't enjoy trading that way. I want you guys to learn it the fun way. Trust me, trading is not supposed to be as hard as people make it seem like. Once you can understand the concept behind it, trust me, you are good to go. All right. So now I want to assume that we are all trader B now. We are all trading the advanced market structure and not the basic market structure. Okay. So now the advanced market structure comes with rules. I have only 8 minutes left. Okay, we're almost done with advanced market structure. The advanced market structure comes with rules. The rules of the advanced market structure. The rules of the advanced market structure. Now, please, you guys, jot down these rules. It is very, 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 very important. Okay? Jot down these rules. Are you guys jotting down? Are you guys jotting down? Okay, good. Now, rule number one. Rule number one. Rule number one. There must always be a sweep of liquidity first. Very, very important. Like, very, very, very important. If there's not a sweep of liquidity in the market, the advanced market structure is not complete. Okay, it is not complete. It needs to be there. There must be a sweep of liquidity. I'm going to start marking it out. There must be a sweep of what? Liquidity. This is your sweep. right? Rule number 2, there must be a break of structure. Rule number 2, there must be a break of structure. After what? After the sweep, are you guys listening? Rule number 1, there must be a break of structure. So where are they? This is what? This is your this is your sweep of liquidity, yeah? Right? Let me make this red. This is your sweep of liquidity. Then where is your break of structure? This right here is your break of structure. Right? Quite all right. Yes. This is your break of structure. Now, these rules, everything must align. If you don't see these rules, trust me, it will never work. In the next 100 years, it will never work. You will be stopped out. You will become the liquidity. Okay? So, rule number 3. Rule number 3, please write. Rule number 3. What must price do? Rule number 3. Price must retrace and produce another liquidity to be swept later. Are you guys getting it? Are you guys getting it? So what did I say? Rule number 3 is price must retrace and produce another liquidity to be swept later. Let's do it. Price must retrace to create another liquidity later. Price must retrace to create another liquidity later, right? And then continue to the upside. Let me write it here. How do I write it? Okay. Okay, let's stop here, right? Okay, this is rule number 1. This is rule number 2. This is rule number 3. This is rule number 3 here. Price must retrace and produce another liquidity to be swept later, right? Let's leave it at that. This is rule number 3. Then what must price do again? Rule number 4. Rule number 4. Rule number 4. What must price do? Price must create another break of structure. Oh God, oh. Oh, should that be? Oh. Price must create another break of structure, which means we must have two breaks. We must have what? 2 breaks. Very, very, very important. If you don't have 2 breaks, it will not work. It will never work. See, and I mean they tell you, I swear with my life. See, on God, trust me. I bet with everything I have in this life. It will not work. So price must what? Create another break of structure. Ah, God. Ah, Jesus. Okay. See. Watch this. Price has what? Price has created another break of structure. So which means we must have 1 break, 2 break. 2 breaks must be there. If 2 breaks not there, bro, now break failure be that. You go crash. I swear to God, you will crash. See, second break of structure, right? Confirm. Now, we have the last, this thing, what they call it, the last rule. Time is already going up. Oh. We have just 2 minutes left. Okay, this is the last rule, Sha. The last rule, what must price do? The last rule, write it down. Oh. Price must retrace back to take out the newly created liquidity. Oh my God. So now so mentorship they be choke. Price must retrace. Hey, I didn't write must. That must they there. If that must see, that must is very important. It is very, very important. It must happen. If it does not happen, so please write down these rules. Very, very essential. Price must retrace back to take out the newly created liquidity. This is it here. This is the newly created liquidity, right? Price has retraced back, right? Take it out and then what? Continue to the upside. Are you guys seeing? We have just 1 minute left. Are you guys seeing? So these rules are very important. Please note it down. Price must take out the newly created liquidity before continuing to the upside. Before continuing to the upside. Oh, I beg, to the upside. We don't got not much time left. Simple. See, that is it. That is it. See, I swear, this is it. With this thing, you're a millionaire. See, I no go lie give you. I swear to God, I'm not lying. Just with this one. Time is up. Oh, please write down the rules. Write down the rules on time. Write down the rules. What I marked from the left side. What do you mean? What do you mean? What do you mean by what is the thing I marked from the? I'm not gonna create another link. It's just a 30 minutes. How to stack? We will get there. Please, first you need to learn how to trade before you learn how to stack. Okay, Tony Stark. Please, you need to learn how to trade before you can start. So please, guys, note down these things, yeah? These rules, they are very, very important. Okay? They are very, very important. All right, guys. So we are done with this thing, basic market structure and advanced market structure. We are going to revisit it again later, sha, but please note down this, and I'm going to drop the assignments for you guys to give to me to be submitted on or before or after this weekend or so. I don't know yet, but I'm going to give you guys an assignment to look out for this. All right.